since you're a capital raiser, another way you can solve the deal flow problem is by partnering with another deal finder. Okay, so you could partner with Eli or Ron, Ron or Bob, who's working a 60 unit right now, right? So Bob's like, oh, well, interesting. Ron's a capital raiser, and I'm working a 60 unit, right? So you can network with the people here and in our environment who may have deal flow as well, especially when you have capital. So your partner has to understand that this is not an exclusive relationship, though that when you find a deal, your priority is likely going to be to partner with him to get that deal closed. But so yeah, kudos to you, man.
I'm all in, and I'm glad I did it. It's given me the time, the focus where I can be 100% on this, and I've really liked that. So I think it would have been different trying to do two things at once. So I'm glad with the decision. Happy with it.
That's awesome.
Where are you in the world, Ron? Where are you at?
So I am in the northernmost part of Kentucky. It's essentially Cincinnati, Ohio. I'm 10 minutes from downtown Cincinnati, Ohio. So Midwest, East Coast time.
Sure.
Yeah, I've been here all my life, born and raised in the area. Really, really love it.
Great.
That's cool. My sister lives in Cincinnati.
Okay.
Brother-in-law and family.
Yeah, it's a great area. I've always really liked it, enjoyed it to be, in the Midwest and close to a good sized city, but we're just across the Ohio River in a different state, but very, very close.
Awesome.
Sounds nice.
Let's review your commitments. We don't have to go through step by step, but maybe highlights, like things that you got done, things you didn't get done, and then also anything that you want to highlight you want to do in the next 30 days.
Who are you asking, Mike?
All three of you. So Bob, since you spoke, why don't you go first?
Okay.
I see you. I probably should share my screen a little bit here.
I put some stuff.
You guys have access. You don't have. We have access to the sheet, right? I don't have to go into this.
Yep.
Ron, do you have access to it?
Yes. Yeah.
Okay. All right. So okay. So again, Bob, just kind of review your previous goals, and then talk about what you want to do moving forward.
Okay. Yeah. The previous goals were, because I had just gotten started. Last time was my very first meeting with you guys. So
right. And
I've like Ron, similar to Ron, I've really gone through the program. I did my SDP, my sample deal package, presented it to Garrett. That's done. It went well. And I've been talking to everybody. I've been talking to lenders and PMs and attorneys. And I'm setting up my national team, which would be the lenders, attorneys, and that. And then within each MSA, I have my local team, and they kind of combine those two. Then I get the PMs and the local MSA. So been working on a deal, actually. It's a 60 unit. And
come on.
Yep. So we've been talking to the broker quite a bit. We've been exchanging information. He's been I've been asking him questions. He sends me back info. So doing that, I want to do more of that. And then I also joined up with Zoom at 8 with Julianne. It was a great group. I mean, it's like a RIA on steroids, nationwide. And I'm meeting all kinds of people in there, like sponsors, GP partners, and that kind of thing. So it's been very good. I'm having a blast. It's just really a lot going on, and it's going great.
Awesome. Fantastic. Cool. Eli, how about you?
So I've been I first was working on my sample deal package, just putting that together, rehearsing it, practicing, trying to get the lingo smooth and have it be natural so I could confidently present it to a potential investor. So that's something I've been working on. I do better with scripts, but at the same time, a script isn't really going to work. So I've been trying to practice the scripts and then kind of make it natural, make it, not canned. So hopefully that will go over. And I've been doing that, practicing, presenting it to my wife, my parents, my grandmother even.
I love it.
That's been fun.
I love it.
And I've also been really focusing on getting the right property management team. My dad has a small multifamily in St. Louis, 16 units. So for the last few months, he's allowed me kind of to oversee the Appfolio app and just follow what's going on and learn more about it, which has been really cool. He's not really hands-on at all. And I've been able to see how much you need a good quality property management, because it's just been a lot of trouble, a lot of turnover. We've had 4 turnovers since the beginning of the year, and the time that turnover has taken has been far beyond what we can reasonably expect. It's gone, sometimes 2 months just for a paint job and a carpet clean. And, if they're not taking it on as their own and having the owner in mind as much, so then you could expect to see something like that. So I've been really trying to focus on selecting the right property management. Reached out to a few owners. I reached out to a couple of the management companies, have 2 interviews set up, but I'm not necessarily so thrilled about like the reviews I've been seeing about them on Google. So we'll see how the conversation goes. I wanted to ask you what you thought about, seeing those reviews on Google. Obviously if someone's upset, they're going to write a negative thing, but you could kind of get a feel for the response time, if the tenants are happy, if the owners are happy. What were your thoughts on basing things on that?
So let's drop that down into the discussion. So I'm just making note right now. Property managers. Yeah, I've
Eli?
added it.
Yeah.
I'm sorry, Michael, I didn't mean to
Yeah,
interrupt you.
yeah, for Eli, yeah. So I just want to get a kind of just how you do on your goals, and then
Okay.
any issues, anything you want to talk about, we'll drop down toward discussion where we want to spend the
Awesome.
bulk of the meeting.
Yeah, sure. So
okay.
that's kind of what's been occupying me lately.
Okay, all right. I added it to the list because you have 3 other items on there as well.
Yeah, awesome.
Ron, how about you? What's next for you the next 30 days?
Yeah, so it's been, the last meeting we had, I was out family vacation, so I wasn't at the last one. So it's been a little while since we've had a chance to connect, but kind of changing the goal. So I've been, when I met with Garrett on Friday, and this is something we can add to the discussion as well, I'd like to get your thoughts, but I'm getting roughly in the Cincinnati area, that's the market that we are focusing on, getting about consistently 3 deals a week. Really not more than that. So Garrett felt that was kind of low and suggested adding another market, starting from scratch with another market as far as building a team in a new market. So really, I think I'm going to have to do that. And that's going to take up most of the time or focus the next couple of weeks is deciding what that market is, property managers, brokers in that area, and just adding another market. I don't want to take away my focus from the Cincinnati market, but I think we're going to have to do that. That's where the main focus will be the next couple of weeks.
That's good. I just dropped it down in discussion. That is actually a really good discussion. So I like that. I liked it a lot. Okay, cool. Awesome. As we kind of do this a little bit more, you start building some momentum, and building momentum is very important. I think, Ron, you said it, each week it becomes a little easier. And that's where we're trying to get to. In the beginning, it's kind of tedious. It's like, I don't know if you ever learn how to play piano or learn play a sport. Like in the first weeks, months, it's not fun, right? You got to you don't have minimal skill set. It's not fun. You're not enjoying it. You kind of have your forced way to get to a minimal skill level, and that's where you're starting to get to right now. And it becomes easier and better. And then the third hurdle you're gonna get is when things take longer than you think they should. That's kind of the next hurdle ahead of you. I think in my book I call it the apartment investing graveyard. I maybe put it in the course. I don't remember. You can fight that by having built momentum and understanding this is a numbers game, and understanding that you shouldn't have timelines around your major goals. Like, for example, Eli, I saw one of your goals for the next 30 days was you get soft commits from 5 GPs, right? So that's nice to get, but again, you don't control the other side. You can only control yourself, versus the goal you had, write a minimum of 5 LOIs or attend 8 meetings. You control that activity. So I would restate that goal saying, I'm going to reach out to X investors per week so I can have 1 or 2 conversations. So measure it by activity level. You can put the intent in there so that I can get 5 soft commits, but that's more of an intent. So you know what the activity is leading to a particular outcome, but you're not assigning a timeline around that outcome because you don't control all the variables.
For sure. Yours, Bob? Did soft comments.
Sorry, it's Bob. I'm picking on Eli, and I should be.
Oh, no. I wasn't sure. Maybe I wrote something.
Yeah.
Perfect. No. It's important nonetheless.
It is. Yeah. So that's kind of where we're getting to here. Okay, cool. So let's talk about the discussion here. So let's just go around the room. Anything you want to talk about? I know Eli's got 5 things already on there. I don't have to
Yeah,
ask
but
Eli
leave
for
your
anything.
time for them.
So maybe we'll break those things out actually, so we can talk about them in rotation. Ron is asking about should he add a new market. Ron, is there anything else that you want to talk about today besides that?
No, that's it for me, the main focus there.
All right, and then and Bob, anything that you want to discuss today?
And nothing more than what's on my list there. I've just got to keep doing what I'm doing and keep adding to it. So, I'm good right now with the direction I'm going. I don't have anything particular to have to discuss in detail.
Well, that's good. Then we'll jump right into it. So, Eli, which one of your 4 things do you want to talk about first?
I guess let's start with the property management. One of the things that I
The
was
Google
curious
reviews or the PM selection?
the PM selection. I was wondering if that should make a difference in the choice that I would make. The company that my dad's been using, they leave a lockbox there, and they have prospective tenants call up and get the code, and they go down there and they kind of self-tour. I wasn't sure if that was the norm, and then I've kind of been going through these different websites, and I see that a lot of the good companies with higher reviews, I should say, are very particular about having in-person showings specifically. I want to know what your thoughts were about that.
How big is this property that you're talking about?
My dad's property is 16. I don't have any particular property at hand.
Okay, so are you asking about the property manager in your dad's property or in general?
In general, for the property manager I would select.
So again,
Care about that.
It really depends. Things are going to be a little different with a 5 unit versus a 50 unit or 75 unit, right? So the reason that the property manager may be choosing that route is because it's only a 16 unit deal. Now, obviously, we all know that it's better to have someone sitting there from 9 to 5. It's much better. And so having a full-time manager there is ideal, but you need some scale for that, right? Typically around 75 units is where it makes sense to have someone, earning $45,000 sitting there, being a full-time leasing manager. That's the advantage. Now, if it's less than that, now you're talking about part-time. So how does a manager address that? And there's different ways a manager can address that. The question is, how do you address it? Well, I can't have someone sitting there from 9 to 5. So how do you do it? Well, I have office hours, for example, and I'm there from whatever 12 to 3 or something like that. And then how do you handle the hours when you're not there? Well, there's a phone number on the thing, and that rings in my office. Oh, okay, gotcha. How do you do tours? How do you do showings? Now, obviously, being there in person and doing a showing is much better than a virtual tour by far. I think that's a little lazy, in my opinion. I think even if there's a part-time person there, let's say the office is 2, 3, 4, 5 miles away, when they get a showing, they should show up in person, because at the end of the day, showing is a sales opportunity, right? So unless the property is going to sell itself, someone's got to there and sell them. They've got to ask for the application. They have to address objections. They have to sell the property. They have to ask for the application. You have to do all those things. Like, there's a sales process. And unless they have it dialed in, now it's possible that this management company has these virtual tours dialed in. Maybe they use really cool technology, like then it could be like maybe it's a live video tour or something, and they're actually on live. Or there's a follow-up process. Hey, you let yourself in. Here's a code. Let yourself in, and call me as soon as you're done, and let's talk. Like, it could be something like that. I think I wouldn't necessarily disqualify one over the other, but I'd like to understand the process, and I'd like to understand what their outcomes are, and compare the outcomes to other print managers who does it more in person, right? But it's one of the things you can ask. Lease up is one of the toughest parts of the business. I find that most managers are not good salespeople. They're good customer service, or they're supposed to be good customer service. Take care of their tenants. They respond to repairs and that kind of stuff, but they're really not good salespeople. So if someone basically doesn't tour the property and come back and fills out an application, they'll just let them go. So you can ask your manager, hey, what are your typical conversion numbers, right? So it's like all the way down from the traffic they get, whatever you define traffic, right? If they're old school and they only take phone calls, how many inbound phone calls do you get? Of those, how many come to the property? Of those, how many fill out an application? Of those, how many actually get accepted? And how many actually move in? Like, there's an entire pipeline, or funnel rather. It's almost like a funnel. And your property manager should be able to give you some rough numbers around that, right? And so if for some reason you get your vacancy is becomes higher, you start looking at the problem of what's the problem, right? Is the problem that, they respond too slowly with repair requests and people move out? Is it a traffic problem, right? Do you have too many move outs? Are the move outs too high? If so, why? Are the move ins too low? In other words, are 5 people moving out every month and 5 coming in, or whatever the case. And then you have to look at the lease up process. And like I said, in our opinion, the lease up process is the most opportunity for improvement. So to the point where we have actually hired a company called Class Leasing, and we have had some mixed results with them, but all they do is specialize in lease ups. And they do it like via Facebook, on a Facebook Marketplace, believe it or not. So they go on there and they market on Facebook Marketplace, and they engage with a person via DMs, but they are literally on site. So they go, okay, meet me here at 2:00. They come here and they send them a reminder, show up, they show them the property, and then they hammer him to fill out an application. They address all their objections. Oh, well, we don't have a gym here. The other one does. He goes, okay. Number one, they take that feedback back, but they might cut a deal with them. You know what? How about I give you a 3-month membership at Gold Gym down the road? Would that work? And you're like, oh, that'll work. Sure. Something like that. They're salespeople. So we have thought at one point, we're still on the table to take the leasing process away from the property manager. But that's also not as easy as possible, because there's got to be the interaction with the property manager has to be correct here. So what I'm saying is, you got to study you got to ask some questions. In general, like I said, an in-person showing is going to be better. It's always going to be better. But if you have a knucklehead doing the showing, it's about as good as a virtual tour, versus, for example, this is a great idea, having a virtual tour, but then you have a salesperson at the other end, right? So it's still a live tour. Hey, do this virtual tour and call me back in 5 minutes. Or I'll call you in 5 minutes. Yeah, I mean, it could work. It's not a bad idea, actually. It's a really good idea. That way, the salesperson, the leasing manager, is actually the salesperson, and they can actually try to close them down then and there. So it really depends, what I'm saying. That's a long answer to a short question.
Got it. Interesting. Thank you.
Cool. All right, let's go to Ron, and we'll come back to Eli here. Ron asked, should I add a new market to increase the deal flow? Okay, let me ask some questions first. So you obviously talked to Garrett around this already. How many deals do you want to underwrite per week, and how many are you getting right now on average?
We're getting on average about 3 to 4 that are sent from brokers that we have an existing relationship with. 3 to 4.
Okay.
I don't know. I think obviously the more the better, but I think around maybe 7 or 8 would be a better number. You're just the odds there of
Sure.
finding something. But 3 to 4 is where we've been consistently falling.
Can you handle 7 or 8 per week?
Yes.
Okay.
Yeah. I have no
Okay.
job right now, Michael.
Gotcha. All right. Well, let's turn it on. Let me ask you another question. So, what city? What are you in Cincinnati?
Yeah,
What's your
Cincinnati
market?
that we are focused on. Correct.
That's a pretty big MSA, though, is it not?
Yeah, it's good. Pretty good size. Yeah.
What's the population?
Kind of close to 3 million.
So I don't know much about Cincinnati market, but it seems like the market is big enough to get you deal flow. Is it possible that you haven't talked to all of the good brokers in town?
We're looking at that. So this could pick up too. So another piece of this that I'll haven't mentioned. So about 3 weeks ago, I have a guy that's joined me, a partner essentially, and he was he was a broker working at Capstone, which is one of the companies here in Cincinnati. I don't know how big they are nationally, but he was actually back in February or March, the first broker I contacted and talked to and met with and got coffee with. The first broker I reached out to, built a pretty good relationship. He was sending me stuff. Then he sends me an email. Hey, I'm leaving Capstone. I just want to do something different. So I'm like, shoot, well, what are you going to do? What's going on? He's like, I want to get into investments. I said, well, what about what I've been doing? You thinking what I'm doing or something like an investment firm? He's like, nah, I want to, real estate investing. So I'm like, well, what do you think about maybe teaming up? Maybe you can be someone who finds the deals. I mean, that's what you were doing. So he has just recently come on board where we've decided to partner and get together, and we're both meeting with, he knows all the brokers in the area. So we're meeting with more of them. If there are any that I've missed, I think we'll be talking to them. There were a few that I reached out to that never responded back to me. So I'm hoping that he can have better luck there. So the deal flow could potentially pick up, but that's new. I don't know where that's going to go as far as does it get up to 7 or 8 a week? I'm not sure.
Well, that sounds like a great strategy, Ron. What a find. I think that could turn out to be a good thing for you guys.
I hope so, Bob. That was the first thing that popped into my mind is, okay, you're leaving. Well, you were doing exactly what I needed, and you
Right.
know how to do this. As far as finding properties, even off market, we're reaching out. He's reaching out to some owners directly because he's not doing anything else either. He has no job right now. So we both have plenty of time.
He
All
could
right.
find the off-market deals for you. That'd be great.
Yeah, that would be nice. That would be ideal. So I'm hoping this, to wrap that up, is that we could see it pick up, but I just don't know yet.
How new is this relationship?
Well, we've started when I first reached out to him when he was still working at Capstone. That was late February, early March. As far as us together, it's been about 2 weeks.
Okay, so 2 weeks. Have you guys worked out the terms of your partnership? Terms meaning potential splits, but more importantly, relevant to this conversation, roles and responsibilities.
We have. We've talked about whatever, we've discussed different scenarios where if we have to bring another GP in, we've discussed that ours would be a 50-50 split, whatever our portion would be.
Mhm.
And his role would be finding properties, finding the deals, as well as potentially once we do that, asset management. And mine is more of the investor side. That's what I was doing for 16 years at Fidelity, talking to high net worth investors. So that's going to be more of the capital side of things, along with, asset management as well.
All right. So he would be more like the deal finder. You'd be more the capital raiser.
Yeah.
Basically. Okay. So on the deal finding side, he's going to look for deals. He's also going to underwrite deals. He would also be responsible for the transaction, the due diligence, for example, that kind of stuff.
Yeah, we both agreed to look at the underwriting together. So
Sure.
I'm doing more of the underwriting, to be honest. And he's looking at it, but I'm underwriting everything, as well as I'm still having the existing relationship with other brokers that I've had and continuing to speak with them every week.
Okay. Well, okay, that's good. I like a few things about this. First of all, your roles are neatly split along the deal finder capital raiser route. So I like that. I find a lot of people, they meet a buddy or meet someone at meetup, and they're like, oh, let's partner. And they're both basically deal finders. So like, dude, why are you splitting the partnership with another deal finder? Okay, it makes no sense. You need a capital raiser, not a deal finder. Oh, okay. Those partnerships really don't work very well because there's too much overlap, right? They're like, well, who does what? I'm doing more than you. No, I should get more. And then they still have to bring another GP in.
Yeah.
So the fact that how you're doing the details under the hood, I'm less concerned about that. I mean, I might have an opinion about the fact that the deal finder should probably underwrite deals and you should probably be raising capital, just saying. But the rocks are in place. And so this is why splitting the role is very important, because you're not getting enough deal flow. And it's because, you're probably doing other things. You're probably underwriting. And then are you meeting with investors or anything like that as well?
Oh, yeah. Yeah, I have an investor meeting today, 2 tomorrow, and several already next week. I'm having about 2 to 3 per week.
Okay. So, right. So imagine being able to spend more time with investors and he's spending more time with deal flow, right? If he spends more time with deal flow, you will get your 7, 8 per week. And it also gets you out of the underwriting thing. Okay. So now you can underwrite more deals. Number one. Number two, you can raise more capital. So that's a good thing. I think that will Cincinnati should be big enough. From what little I know about it, should be way big enough. I just think you're not talking to enough brokers to getting a deal flow. I don't think you're talking to all the brokers in Cincinnati right now.
Okay.
And then what deal size are you looking for roughly?
40 to 60.
Right. So you're not looking at 200 plus unit deals, of which are a finite amount. You're looking at lots of deals, right? Lots of deals. The other thing with your partner that you should talk about is the scenario where you partner with somebody else. In other words, you're not in an exclusive relationship right now. You're not married. You're dating, okay? And not exclusively, meaning that since you're a capital raiser, another way you can solve the deal flow problem is by partnering with another deal finder. Okay, so you could partner with Eli or Ron, Ron or Bob, who's working a 60 unit right now, right? So Bob's like, oh, well, interesting. Ron's a capital raiser, and I'm working a 60 unit, right? So you can network with the people here and in our environment who may have deal flow as well, especially when you have capital. So your partner has to understand that this is not an exclusive relationship. though that when you find a deal, your priority is likely going to be to partner with him to get that deal closed. But if for some reason Bob calls you up tomorrow and says, hey, I got this 60 unit like under LOI, you might go, you know what, I'm going to do this thing. And so you may have to navigate that a little bit.
Yeah, that makes sense. That's a great point and something that we need to discuss, because I have thought about that, obviously, with the network and talking to some of the others in the DMM community and other students, but Sandy and John, been talking with them, the past couple of weeks, John Funderburk. So
Yeah.
I've talked to, quite a few of them, and I can see where that makes sense.
Right. Yeah.
That's great. I'm really glad to hear this. That's helps me too, from what Ron's doing there and what your comments were, Michael. That's great. Appreciate that.
It's interesting that you say that, Bob, because one of the things we're doing with a mentoring program is we're actually turning our mentoring into this format. We call them deal pods. This is basically a deal pod.
Mhm.
And so we've in the past had one-on-one mentoring, which sounds like it's very valuable, and I'm sure it is. The problem with that is no one else gets the benefit of the answer from the mentor, right? So Ron just asked me if I were in a one-on-one meeting with Ron. He goes, "Oh, I have one-on-one access to my mentor," but you couldn't hear the answer to the question.
Mhm.
So so in this case, Ron asked me a direct question that benefits him directly, but next time you're going to ask a question, and then Ron's on there and goes, "Oh, I never didn't think about that. Like I wouldn't have known that had I not been on this call." So
Right.
this is kind of the model we kind of dabbled in this, year and a half ago, and we kind of put these people in deal pods, and people really liked it for the most part. But so what we're doing is we're kind of blowing that up. So we're kind of putting people on deal pods, we're pairing them with a mentor. So it's like a mastermind on steroids. So I'm glad you just said that, because that has been our theory all along, is that it actually be better for the students to be in a small group like this.
Yep. All right. Good.
Cool.
Yeah.
Awesome. Eli, you have 3 more questions here. Which one do you want to tackle next?
I guess, we mentioned before the Google reviews. Want to know your thoughts about that. How much
For the property managers or a property or what?
with the property managers, property management company. I guess common sense would tell you to take it, listen to it, but take it with a grain of salt.
Take it with a grain of salt. I agree. I think you definitely have to look at the reviews. Like things I look for are they all one-sided, right? Are they all negative? Because with apartments, like you go to any apartment and you got 3.6 stars, like everyone is 3.6, 3.8, they're all below 4. Like, oh my gosh. Well, tenants really don't leave a review unless they hate something, right? So if it's all one-sided, then you got to take that with a grain of salt, because you're hearing from the very loud minority, possibly. Now, for example, with a restaurant, it's different because there's so much volume and people rave about it or they hate it, right? So restaurant reviews I find are very balanced. So if a restaurant really gets 3.8 stars, it probably sucks, right? Because there's foodies out there that love something, they're going to give it a 5-star review. But tenants really don't give 5-star reviews. Now, you can change that as an owner. You can actually make it a thing and actually go after your tenants and get your tenants to post reviews, and just get as many as you can, because it's more balanced, right? And so now if the people who are actually happy post a review, the star rating starts going up. So what I'm saying is I don't know how sophisticated this property manager is about getting reviews. Are they just being reactive and they're just getting mostly negative reviews, right? Because at the end of the day, property manager is kind of a thankless business. If things go well, it's not like you get a gold star. You're like, yeah, you're doing your job. Good job. I'm not going to fire you today, right? But if things don't go well, you're going to hear about it, right? So it's not like it's very difficult to overachieve in property management. So why would someone leave a 5-star review on a property manager? I don't know. It's kind of like a tenant. So take it with a grain of salt. I think the biggest thing you can do, though, is you can drive their properties, right? You can get them to give you their financials, and don't just ask them for the 3 best ones. Like I would say, give me not the financials, but the key metrics, vacancy rate, just anything they can share it with you. Give me access to your portfolio. Make it anonymous if you want. I just want to see what your average portfolio is doing. And they may give you that, they may not. But for example, when I got in the restaurant business, I didn't do that. And so the franchisor gave me their best 5 franchisees who were printing money. But had I asked for the average franchisee, they were actually not making money at all, and the bottom was losing money, right? So and then I would say, and then pick like 3 or 4 of them and drive those properties. Just drive those properties and talk to the manager, get an impression of the place. Maybe bump into some tenants and ask them how they're doing, that kind of stuff. And just by driving the property, just by going by, even if you don't talk to anybody, you get a sense especially if you drive multiple properties, right? You get one that looks like crap. Okay, that's not good. But if the other four look really good, then maybe what's going on, maybe the manager wasn't on vacation that week, or they're currently don't have a manager. Like there's maybe a reason for why that there's trash out front, right? But if the majority of the properties look kind of run down and not taken care of, well, they're not going to treat yours any differently.
Right. That makes sense. Yeah,
Yeah.
for me over here in Israel, it's a little bit more difficult to do a drive-by. I
Yes.
do have a planned in the not too distant future, but I've been trying to think of different colleagues or friends that can maybe, go by for me. It doesn't, they don't have skin in the
Nope.
game and it's not theirs, but
So I know it's harder for you because you're far away, but I know your flight's slightly longer. Now, Ron's flight, he doesn't have one. Bob, do you have a flight? Where are you again, and where are you investing?
Yeah, and I have a flight. Yeah, Minneapolis, St. Paul, Oklahoma City, and Indianapolis.
Right. So you have a flight. So your flight's a little bit longer, but your challenge is still the same. Okay, whether one flight is 2 hours or 8 doesn't really matter. The point is, Eli, you're going to have to hop on a plane as soon as you have a short list of team members. Okay. So you have a short list of your top 3 property managers because of the Zoom calls you've had, maybe the online research, maybe some blah, blah, blah conversations. And then you're going to have to hop a plane and do those things we just talked about. You also use that opportunity to talk to your short list of brokers, right? Anyone local that you need local. Those are the 2 main ones. Your lender's probably not going to be local. Insurance broker probably going to be local. But your property manager and brokers are all going to be local, right? So that's when you spend 2 or 3 days or whatever, even a week in the market and really vet those people, but also build relationships, right? So vet them, yes, rank them by 1 to 3, but then really build relationships with each of those people. And that's how you do that. So when you go back to Israel, you've already put in the time, you've created your team, your short list, and you've built some rapport with them. So when you call them up and say, hey, I got an LOI here, can you swing by this property and give me a visual and then get back to me and let's sharpen our pencil on the underwriting and go, sure, absolutely. Because now they know that you're serious, right? You're investing, you have an advisor, a mentor, you're investing time and money into coming out there. You obviously have an LOI, right? So you're a serious person. Therefore, when you do a deal, they're gonna manage the property and it's time well spent for them.
nice.
Hey, Eli, maybe you could have your dad's property as your first deal.
Well, that is a really good idea. Let's explore that real quick. What did you have in mind?
Bob or myself?
Well, no, Bob, can you develop that idea a little
Yeah. Well, maybe treat your dad as a potential seller, and you could approach him and tell him everything that you've been learning from what we've been happening here, and say that I could help you out. You could either maybe do a partnership, or maybe he'll be nice and give you the whole thing. But you could do a partnership. You could say, I can find you the PM, the property manager. We should control the expenses on the property. We should look at where all the leases are, so we can get people, if they're people that are not paying, and if they're paying under market, then you can turn it over. So I mean, just really approach it like you would any type of a seller, but maybe if you present the deal to him, he could see the benefits, and it would benefit all you guys. You'd have an increase of NOI and a working property.
I think that's a good idea, Bob. I think the idea is even bigger than what you're thinking, what you're saying. You're saying, how do you leverage your dad's 16-unit property? And I think what Bob is suggesting, well, you can get involved in the management side of things and really learn more about the management side, but you can also use it to put your dad on your team, for example. And you could say he could be an advisor, of course, and you say, hey, I have an advisor. So when you have a mentor, you can have an advisor, but you can have your dad an advisor, or you can even give him a tiny percent of the GP of your next deal and actually call him a partner. I mean, you could be a partner. It's like, my partner and I, whatever, and you basically start leveraging your team's track record. So it's a good idea, actually.
It's
Really
interesting, right? You said, I could come to a broker with having been in the business for 10 years or whatever.
That's right.
You had another property, right? I get that. I'm going to think about that actually. Want to learn how to want to learn the steps and learn how to do it for real. But I guess it doesn't hurt to be able to use that advantage.
No, I think that's for real. That's as real as it gets. And and you don't even have to go find the property. It's right there. I think it's a great opportunity.
Interesting.
And you're still doing it yourself. It's not like your dad's doing any work for you. Okay. You still have to earn, but my goodness, you might as well leverage the tools in your toolbox. Not that your dad is a tool, but you know what I'm saying? Leverage what you have around you and then, I think I have this conversation with my kids sometimes, right? They're like, oh, I want to do things on my own. I don't want you to help me or anything. I was like, well, okay, that's fine. But why don't you leverage what you have around you? Leverage it at least. I mean,
Right.
there's no need to throw it all away and start over from scratch. Like, why move out and live under a bridge and beg and borrow and steal? And then why start at that level when you can start at a higher level? Now, you can still exceed what I have done, but why don't you start at a higher rung? Right. So you already have one rung in your ladder that most people don't have. You might as well start at the bottom rung versus on the ground floor.
Yeah, that's good. I really like that idea, Bob. Thank you.
Sure, of course.
That's the mastermind right there. See, that's awesome.
Absolutely. It's so true. Ron, what do you have to say? Looks like you had something good to say.
Now, when you mentioned like reviews and you're referring to reviews on the property managers, right? On the Google reviews, is that correct?
Yeah.
Okay, we've, when I first was getting started, we were having some trouble with just finding enough property managers to really interview. And I would make sure when you talk to one or several, like Michael said, you really can't, wouldn't put too much in relying on tenants reviews. I would make sure you're getting a couple of references from owners on that property manager who is, the property manager, their current owners. Ask if you can speak to some of the owners that they're currently working with and get an idea of really how they operate. Are they happy? What they like, what they don't like? I would make sure to do that.
Sure. A reference from them. They would give that out, right?
Current owners that they're working with, so you can speak with them.
Absolutely. And they wouldn't have an issue giving me some names and owners, right? Maybe that would be helpful for them.
I haven't run into that. I wouldn't think so. I would think if they want more business, they would be open to that. But I haven't run into that.
Cool. I'm gonna take note of that.
If they're not willing to, that's probably a pretty good red flag.
Right.
Yeah, I would take it a step further. Definitely get references, but normally they will give you their best 3 references, right? If you can get the addresses of their property saying that you just want to drive by without a direct reference, that's also valuable because you can see the other properties that may not be in their top 3.
Yeah, absolutely.
Yeah, thank you.
Cool.
Did anyone have any questions?
Yeah, what else is on your mind? What else do you want to talk about?
Oh, I want to know if anyone else had any questions before I go again.
You got 2. 2 left.
All right. I wanted to know when I've been filling out the SDA, I've been trying to understand all the numbers. And when I was presenting the sample deal package, also we kind of present the increased value at the end at the resale at the time of sale or refinance.
Mm-hmm.
I understand I wanted to know if there's a difference between an increased NOI and the regular appreciation that any item in general might go up in value. Let's say someone has a diamond ring, then it might appreciate over time. Even though I didn't necessarily increase the NOI of the product. Is there a difference? Are they 2 separate things? Or when we talk about a higher value of property at the time of selling it, is that
right? So well, there's 2 variables, right? Price is equal to, what is it, NOI divided by cap rate, right? So any one of those 2 changes, it affects the price. So if the NOI goes up, obviously the price goes up, but if the NOI stays the same and the cap rate goes down, the price goes up also, right? So you have variability in cap rate. So it is, in fact, it's a huge driver. Like if you change the exit cap rate by half a point, the exit price swings wildly, right? So I was just bringing up here I'm just bringing an STA here, right? So this is one of our case studies, a 44 unit. So I got an exit strategy here where, the exit cap is, I don't know where is my exit cap? 7.6 for some reason, right? So this is probably 7.6. So like, for example, 7.6, I have an IRR of 15. Okay, so let's say I just change it by half a point. So that would be, what is that? 8.1, just for grins. What does it do to my IRR? Oh, sorry, other direction. Idiot. Sorry. -5. So it would be 7.1, right? The internal rate of return goes from 15 to 18. Huge. So the cap rate makes a huge difference.
So when we talk about appreciation, we mean a lower cap rate, in other words.
That is correct.
Okay, that's what I wanted to know. If there is
you can't say appreciation. Yeah. There's forced appreciation, which is the NOI, the value add, but then I would say market appreciation is related to the NOI, I'm sorry, the cap rate.
Right.
Yeah, you're right. You're right about that.
Some of the sample deal packages that I was watching on the DMM, some of the people, they kind of factored in a higher cap rate because we don't necessarily know what to predict in 5 years, but they were still showing, as they're presenting it, they were saying we have the property value be significantly higher because of number one, because of the improvements we've done, and the NOI is much greater, and the appreciation. But they were also still factoring a higher cap rate. I wanted to know if that.
Yeah, that is not correct.
That's
right?
not correct.
So if the cap rate stays exactly the same, then there's no market appreciation. There's only forced appreciation. You can't have there's forced appreciation and market appreciation, and together they're called appreciation.
Interesting.
Yeah, you can't have So that was probably misspoken a little bit. In fact, if the cap rate increases, you actually have market depreciation, right?
Mhm.
Right.
Now, right now in this environment, okay, the how we're underwriting deals is a little mixed. So we used to use a higher cap rate, and we are now using a cap rate equal to the current cap rate, and sometimes we have a slightly lower cap rate, which is not as conservative. But the argument is that in general, the interest rate outlook is down. Kind of like 2.5 years ago, the general interest rate outlook was up. Therefore, we projected a higher cap rate. And now the general outlook is equal to or lower in the interest rates. So we feel like we can get away with a cap rate that is equal to current and possibly, a quarter point lower.
Yeah, Michael, is that a market to market? Yeah, depending on the market doing that, because I know the SDA is automatically adding 0.5% on the exit strategy automatically. So I don't, if it's obviously more conservative going that way. I don't know if to change the underwriting, what your thoughts are, if we should do that, leaving the cap rate the same after 5 years, using the same, or
it's up to you, right? You and your mentor and the collective experience, right? It varies widely, I would say right now, right? But before 3 years ago, everybody's like, oh yeah, cap rate better be higher 5 years than now. We're like, oh yeah, that makes sense. And now there's a little bit of a mixed bag, largely because people have always been using a higher cap rate. And now we're like, I don't know, does it make sense? Is it being overly conservative?
Yeah,
I just feel like right now we're being overly conservative, right? So even if I use the same cap rate as a market right now, it's less conservative. But I also feel like it's realistic, because what will likely happen is the cap rates will go down slightly. That's probably what's going to happen. So if I underwrite it with a cap rate equal to where I am right now, I can pay more. I'm more competitive. I get more deals done.
right.
And the likely scenario will be that it's actually going to be down by 0.25%. So I have a margin for error built in. Now, on the other hand,
you think that's due to the interest rate environment where we're at on the higher end and potentially drop in September?
I do think that's the interest rate environment, but even more so, if the interest rates were to stay exactly the same where they are in 5 years, okay? If that were the case, I still think the cap rate's going down because things have stabilized. Rents have gone up because the fundamentals are so strong. The demand for multifamily is going to continue going up.
Yeah.
And this is what we saw in the run up to 2022. People were getting into the asset class because rents were going up so rapidly. And then there was a bit of a frothy market environment where people were simply wanting to pay more to get into the asset class. So what I'm saying is there's going to be higher demand, continued high demand for multifamily. Things will have stabilized. In so doing, the other thing that's going to happen is not just interest rates. It's the loan to value is going to start creeping up again, right? For now, we're at, gosh, if you're lucky, 70% with pref equity layered on top of it, if you're lucky. But back in a day where we're getting 80% loan to value. Well, even if going from 70% to 75% is going to increase your returns on a huge basis. So that will, because of that, once the returns go up, okay, people are willing to pay more to get that return. So that'll push cap rates down. So I think if interest rates stay exactly where they are, cap rates are still going down by 0.5 point. So if I put cap rate where we're right now, I can defend it, and most likely the market will beat those projections. But again, pure speculation. Only one person giving you my opinion.
Yeah, do you see any, I don't know, thoughts on this, where I was looking at Bigger Pockets, listening to some of their podcasts and everything. I saw last year where 2023, across the country, we had the most multifamily units added last year in 40 years.
Right, yes.
If that trajectory, does that do anything to the market overall in the next 4 to 5 years?